We're going to begin, as we always do, talking about the markets, and it has been a busy stretch between trade policy updates, economic data for our viewers to sort through, including inflation last week, as well as corporate earnings. And so now for a deeper dive into where we stand on those corporate results, I'm joined by Christine Short. She's head of research at Wall Street Horizon. Christine, welcome. Always good to see you.
Great to be here. Thanks for having me.
Where do we stand this far into earnings season?
Well, we're almost done. We're at 92% of the way through S&P 500 reports, and so far the results have been, I think, better than expected. We're ending at somewhere around 13.5% EPS growth. That's almost double where we began at the beginning of the season. We're only expecting about 7% growth, but remember, analysts came in and really ratcheted down ahead of those reports. So coming in higher, 78% of companies that have reported have beat on the bottom line. That's in line with what we've seen historically. Only 62% on the top line, so that's a little light, but it's on trend as far as the last several quarters. But overall, this is the second quarter of double-digit earnings growth. So Q1 kind of in the bag now, in the past. Performing better than expected. It's really the forward-looking guidance that we were paying attention to this quarter, and that's looking a little more cautious.
So what more can you tell us about that and how corporations are expecting to fare in an environment that has seen market volatility and, of course, changes to trade?
Yeah, so first quarter is obviously, when we get those reports, that's backwards looking. We know a lot of the tariff, trade policy was not implemented in the first quarter. I think the only bit that was on March 4th was the 25% tariff on goods not covered by the U.S.-Mexico-Canada agreement. And so we did start to see some of those filtered in, but others didn't take effect until April, the universal tariff of 10%, 30% for goods coming in from China, and then others are still paused. So we've seen investors very happy about those exemptions and pauses, but companies and consumers aren't so sure. We just heard from Walmart last week. That is really the one to set the tone for consumer-facing businesses, right? They are the world's largest retailer, and they had to raise prices in April and May. And of all the retailers, a big box name like Walmart, you would think they can negotiate. They have strategies to keep prices low. And CEO Doug McMillon said, yes, they are really trying to keep those prices low, but they did have to pass them on in April and May just because retail margins are so narrow already. They're making less than 3% for their net profit margins. So they need to pass that on somewhere. It's been passed on to the consumer. And so when you hear a report like that, and we've got a bunch of retailers on tap this week, you think if Walmart's having to do it, expect to hear some of those same comments this week.
Interesting. So to that end, Christine, comments on trade, on prices, we can expect that from retailers. Anything else that you anticipate would stand out in these reports this week?
We're going to hear about what these retailers are seeing on the consumer end as far as what is the health of the U.S. consumer. We saw University of Michigan consumer sentiment last week falling to its second lowest reading ever. And this is a survey that's been done since 1952. So it came in at 52.2. The lowest on record was a reading of 50 back in June of 2022. That's when inflation was at its highest rate in 41 years. And so you're seeing again that consumers are very, very queasy. And despite the fact that, like I said, investors have liked some of the tariff pauses, consumers are reacting differently. They're holding on to their money because they see prices going up and they don't know what to expect when that 90-day pause is over. And so they are preparing themselves just as corporations are preparing themselves.
Interesting. And in terms of where we go from here, obviously trade policy will be a focus for the current quarter when those results start coming in. Have we seen any companies comment on the path forward for borrowing costs and how they would navigate something like that?
Yeah, I mean, right now, most of the comments we're seeing about how they're trying to offset is, of course, passing on to the consumer, but certainly borrowing costs are still very high. That's something that's factored in. Not every company is saying it's going to impact their top line. We had Birkenstock out last week. They're kind of an interesting case because they have such a loyal consumer, a bit of a higher-end consumer. A lot of their goods start around $100. They said they've had to, increase costs, but they don't expect it to impact demand. They're still expecting revenue growth of 15 to 17%. So it's really a case-by-case base. We get some of the off-brand retailers this week. Those are some that are actually expected to benefit in this environment because, when there's a slowdown in the macro environment, consumers trade down, they're looking for value, but also they sort of insulate themselves from the tariff issue because they're getting goods from department stores that have already paid those tariffs. And so, yeah, some of that might be passed on when those goods from department stores come to the off-brand retailers, but they're still avoiding that initial cost. And so those are some of the winners that analysts are expecting.
Interesting. It does, though, seem like even though the president can pivot on his stance on trade policy at any given moment, it sounds like, Christine, some of these companies, they just simply can't be as agile as the direction coming out of the Oval Office, and that this might take months, if not longer, to work through.
Yeah, some analysts are saying the damage is already done. Even though, like I said, you see markets trading higher because everyone's celebrating these pauses, companies have started to prepare since he got in office, even maybe before, doing things like stockpiling warehouses. That increases prices. If you have to pay to have things in a warehouse, those prices are getting passed on. But because they've had little information, they've had to go ahead and prepare for the worst. And I think you're seeing the same with consumers. They loaded up on high-ticket items like automobiles and appliances in the first quarter. So you're seeing retail sales were great in last month in March, but they dipped in April because now there's that slowdown. Everyone's kind of front-loaded. And so you're still going to see some of the damage being done, even if the administration pivots at this point.
Interesting. Christine Short, head of research at Wall Street Horizon, with an update on this earnings season. Christine, thank you as always.
Thank you for having me.